Good evening. Tonight we're exploring platinum, a metal rarer than gold with a silvery white shine that's captivated jewelers and investors for centuries. Its allure is legendary, gracing royal crowns, luxury watches, and the world's most exclusive jewelry collections. But platinum is more than just a symbol of wealth and prestige. Platinum's true value goes far beyond jewelry. It's a silent powerhouse in industry, medicine, and even the air we breathe. From the heart of chemical plants to the precision of medical devices, platinum's unique properties make it indispensable in modern life. As a catalyst, platinum speeds up chemical reactions, making it essential for producing fertilizers, refining fuel, and powering medical devices. It's also used in cancer treatments and in the electronics that power our digital world, quietly supporting technologies we rely on every day. Most of the world's platinum comes from just a few countries, mainly South Africa and Russia, making its supply chain fragile and its price volatile. Any disruption, whether political, economic, or environmental, can send shockwaves through global markets. But for most people, platinum's biggest impact is hidden under the hood of their car. Nearly every gasoline and diesel vehicle uses a catalytic converter coated with platinum to clean up harmful exhaust. This small device has a massive effect on our environment. This device transforms toxic gases into less harmful substances, keeping our city's air breathable. Without platinum, urban smog would be far worse, and millions would face greater health risks from pollution. This single use ties platinum's fate directly to the automotive industry. Its scarcity and critical role make it a metal the world can't afford to ignore. As we move toward cleaner technologies, platinum's importance may only grow. Today, that delicate balance of supply and demand has been dramatically upset. The story of platinum is about to take a turn that will affect us all. Let's see how this hidden metal could shape our future. On December 26, 2025, platinum prices exploded, surging 8% in a single day to a record $2,113.62 per ounce. This dramatic spike sent shockwaves through global markets, instantly grabbing the attention of investors, analysts, and industry insiders everywhere. This wasn't a slow climb. It was a vertical leap that stunned traders and analysts alike. The metal is now on track for its largest annual increase ever, rewriting the record books and leaving even seasoned market veterans scrambling to keep up with the pace of change. What caused this? A perfect storm, tight supplies, a shocking policy reversal in Europe, and a flood of investment money. Each of these factors alone would have been significant, but together, they created a market phenomenon that few could have predicted. Each factor alone would be big, but together, they created an unstoppable force. Trading floors buzzed as buy orders flooded in, triggering a short squeeze that sent prices even higher. The sense of urgency was palpable as traders rushed to cover positions and capitalize on the momentum. Rising prices attracted more buyers, amplifying the surge. For most, $2,400 an ounce sounds abstract, but it's a new benchmark for everything from cars to medical equipment, jewelry, and even high-tech industries. The ripple effects are being felt across sectors, as manufacturers and consumers alike adjust to this new reality. It reshapes the strategies of mining companies and investors. The economic landscape is shifting, and platinum is suddenly at the center. Decisions made now could define fortunes for years to come, as everyone from miners to hedge funds recalibrates their approach. This isn't just a headline, it's a signal that the world's priorities are changing. Platinum's surge is forcing a global rethink, from boardrooms to government summits, as leaders grapple with the implications of this seismic shift. The question now, what set off this chain reaction? Let's look at the policy shock that changed everything. Stay with us as we unravel the story behind platinum's meteoric rise. The biggest catalyst for platinum's price surge came from Brussels, the heart of European policymaking and regulation. In a move that stunned both the automotive and environmental sectors, the European Union abruptly reversed its plan to ban new gasoline and diesel cars by 2035. Citing mounting economic and infrastructure concerns, EU officials scrapped the ban, allowing continued sales of internal combustion vehicles if they meet much stricter emission standards. This decision came after months of heated debate and pressure from automakers and labor unions. This political earthquake sent shockwaves through the auto and commodities markets, instantly changing the outlook for several key industries. The future was supposed to be electric. Now millions of gasoline and diesel cars will keep rolling off assembly lines across Europe for years to come, reshaping the industry's roadmap. For platinum, this is huge. Every new car needs a catalytic converter, and every converter needs platinum. The demand for this precious metal is suddenly back in the spotlight. The market had priced in a future where this demand would vanish, expecting a rapid shift to electric vehicles and a decline in platinum use. Overnight, that demand came roaring back, catching investors and manufacturers off guard. The EU's decision didn't just preserve platinum's role in the automotive world. It resurrected it, giving the metal a new lease on life. The long-term demand forecast for this metal has been completely rewritten, with analysts now scrambling to update their projections. The world's automakers and platinum miners are scrambling to adjust, racing to secure supply chains and rethink their strategies in this new era. Why does a policy in Brussels send platinum prices soaring? It all comes down to catalytic converters. Hidden in your car's exhaust, this device uses a thin layer of platinum to transform toxic fumes into safer gases. Platinum's unique chemistry makes it the perfect catalyst, cleaning up to 90% of harmful pollutants. The EU's reversal means millions more cars will need these converters, and platinum. The market had expected this demand to disappear with the rise of electric vehicles. Now, that future demand is back, ensuring platinum's central role in the auto industry for years to come. The stakes for this metal have never been higher. While demand surges, platinum supply is shrinking. For months, global production has lagged behind industrial needs. Most platinum comes from South Africa, where mining faces power cuts, labor disputes, and rising costs. Frequent blackouts halt production, shrinking global supply. Deeper mines and tougher conditions make extraction harder and more expensive. Strikes and operational challenges further disrupt output. As a result, the world is consuming more platinum than it produces, steadily depleting stockpiles. This persistent deficit set the stage for today's explosive price move. When demand returned, there simply wasn't enough platinum to go around. Platinum isn't easy to find or extract. It's buried deep in South Africa's Bushveld igneous complex, locked in low concentrations. Mining requires moving tons of rock for just 1 ounce of metal, an energy-intensive, dangerous process. Mines plunge over a mile underground where heat and pressure are extreme. Labor disputes and safety risks are constant challenges. The richest deposits are gone. Companies now dig deeper and process lower-grade ore, driving up costs. Years of underinvestment, expecting demand to fall, left the industry unprepared for today's surge. Even with high prices, new supply can't come online quickly. The platinum industry is caught in a bind, rising demand, but no easy way to boost output. Investors are the third force behind platinum's rally. Gold has long been the safe haven metal, but its recent performance has disappointed. Sensing opportunity, investors rotated out of gold and into platinum, which they saw as undervalued and critical to industry. This shift unleashed a wave of speculative buying in the much smaller platinum market. As supply issues mounted and rumors of the EU policy change spread, savvy investors piled in. The EU's reversal confirmed their bet, triggering a flood of new money. The result? A textbook case of fundamentals and speculation combining for a record-breaking rally. Platinum's price surge is as much about market psychology as it is about supply and demand. The metal's fortunes have shifted overnight. But who wins and who loses from this upheaval? Platinum miners are the big winners, especially in South Africa, Russia, and Zimbabwe. Their profits and national economies are set to soar. Investors who bought early are celebrating massive gains, but automakers now face soaring costs for catalytic converters, likely passing these on to consumers. Gasoline and diesel cars may become less competitive, ironically speeding up the shift to electric vehicles. Jewelry makers will also feel the pinch as platinum rings and watches become pricier. For consumers, expect higher car and jewelry prices. The ripple effects of platinum's surge will be felt worldwide. In this new reality, every stakeholder must adapt. What's next for platinum? The future is uncertain. As long as auto demand and supply deficits persist, prices may stay high. But high prices spark change. Industries will try to use less platinum or substitute cheaper metals. Automakers may accelerate the shift to electric vehicles, eroding platinum's core market. Mining companies will push to boost output, but new supply takes years to develop. The market is at a crossroads, caught between short-term fundamentals and long-term innovation. For now, platinum is in the spotlight, its value finally recognized. But in the world of commodities, nothing stays the same for long. The only certainty is that platinum's story is far from over. Thanks for watching.